But you see, this is such a risky company. Here's why I'd have to stay away from Neo. First off, they're Chinese owned, but I'd consider some Chinese stocks like Tencent and AliExpress. But look at their net income right here. This is what's really scary about Neo. They're losing a lot of money, over 700 million of net income a quarter. That's nearly 3 billion a year of losses, and the whole company is worth 9.8 billion. So they're losing one third of their market cap every year in net income. Plus, sadly, they're diluting the shareholder when the stock price is at all-time lows. So anyway, this is just one I would be careful of. I'd stay away from Neo. It could be a fun swing trade on earnings, but I would not long-term hold that one. So yeah, hopefully that's a swing trade. And I own a lot of swing trading stocks. Like, let me head over to my Webull portfolio. And I've tried trading. I'm down 14% in this portfolio. So don't listen to me. I'm not an expert, but I own some kind of swing trade stocks like Super Microcomputer, SoFi, Robinhood, even Rumble, dude. Rumble is so volatile. Uh, but yeah. In OX, what up, Ian? I'll give you a quick analysis on this one. Yeah, if you guys got any stocks you want me to look at, let me know in the chat. I'll check it out. Yo, Cam Music. Yeah, well, check out Sprouts Farmers Market. I got you, dude. So, or after this one. So this is Nano X Imaging. So this is a really risky one, it looks like. Only $370 million market cap. So they don't have much sales, I'm guessing. So yeah, look at that. Actually, this is good news. The sales are up 22%, but it's only 3 million. So they have 3 million of sales. And did they lose 10, 15 million a quarter? Oh, look at that. They have a great balance sheet, but their assets are slowly going down. Sorry. Let me get my water here. So yeah, in NOX, they have a great balance sheet, but I'd be careful of the net income losses. And they're just a really small one. Yeah, Cam Music said Sprouts Farmers Market. This is one I actually own here in my Webull portfolio. This company actually has no debt whatsoever. I don't know if anyone's heard of them. They're like a healthy grocery store here in the US, but Sprouts Farmers Market, they're a great growth company. If we just look at their net income year over year, on all 4 quarters, that's the year over year growth rate. It's up 59% year over year. So that's some incredible net income growth. Plus, the no debt takes a lot of risk off the table. I actually have a watch list here of a bunch of stocks with no debt. So you've maybe heard of like Duolingo, Palantir. Yelp is no debt, Zoom, Pinterest, DocuSign. So yeah, these are a lot of interesting stocks. Even Reddit. Reddit has no debt. And just because a stock has no debt doesn't mean they'll do good. Like, look at Celsius right here. Unfortunately, Celsius has absolutely collapsed. If you're wondering like, hey, what happened to Celsius right here? Why their stock go down so much? Well, I think it's because of this net income loss right here. They used to make, 50, 70 million a quarter, but now they just lost 18 million. So anyway, it's just cool when they have no debt. It takes some risk off the table. They don't owe anyone any money. Oh, here we go. What's up, Supplement? Let's check out SOUN. So this is SoundHound AI. Yo, what's up, Maya? Yeah, if you guys got any stocks you want me to look at, let me know in the chat. So here's what's really cool about SoundHound AI, and this is what you really want to look at. It's the subscription revenue right here, and this is what's absolutely crazy. Look at their subscription revenue. A year ago, it was only 490,000. Now it's 30 million in the most recent quarter. At this incredible growth rate, what's it going to be next quarter, or what's it going to be this time next year? So that's had someone similar profile. Nah, hey, bro, this is my only account. I don't sell anything. I don't got a course, book, Discord. I don't got none of that. So no, that was not me, bro. Yeah, watch out for people impersonating me. So here's MU. Yeah, what's up, Brian? Or Binya, what's up? This is MU Technologies. I kind of own their competitor, and I like MU Technologies actually. And I'm down like crazy on this stock, but I own AMD, for example. I own 12.95 shares of AMD. We have an average cost of 124, so we're down like crazy. But this stock looks very similar to AMD because they're pretty similar. They're not in data centers, but check this out right here. Look at their compute and networking revenue. This is what's ridiculous. It's up 153% year over year. Incredible growth. And if we just look at the profits here, the bottom line, they used to lose net income every quarter. They used to lose money. Now, look at that. They made $2 billion just in the most recent quarter. So that's what's incredible about MU, in my opinion. Yeah, that was not me. Hey, yeah, no problem, bro. MU earnings. Oh, wait, are they up? Oh, let me check them. Let me double check them. Oh, yeah. So let me check the after hours. You're right. Look at that. So they're up 5.2% after hours. So, hey, they just reported earnings, it looks like. Congrats if you own them. Nice. Oh, Shadow, what's up, man? He said SCHD. Yo, this is a dividend ETF. So I actually like this one. If you're looking for like a higher yielding ETF that's like different from the S&P 500, This is one to consider and look at it. It's done pretty good since 2019. But look at their top holdings. It's AbbVie, Coca-Cola, Pfizer, Verizon, and Chevron. A lot of these are like Warren Buffett's top 10 holdings. So yeah, that one is like a 3% yield. And yeah, if we go to Buffett's top 10 holdings right here, he owns some of the same ones like Coca-Cola, Chevron, Bank of America, American Express. His main holding is Apple. It's 23% of his portfolio. Kind of crazy. Yeah, Apple's one to just hold forever. Yo, what up? I'm Jad. What's up, man? You got a stock you want me to look at? Let me know. We're live on YouTube and TikTok right now. Yeah, for y'all on the TikTok, if y'all want to support me, head over to my YouTube channel. It's called Nathan Robert. I'd appreciate that. So Catherine says, is SMCI bearish or bullish? So I do own that one as well. So that's super microcomputer. This one, mm, I'm gonna say that I'm biased because I own them, but I'm bullish on this stock. Obviously, I think they're gonna do pretty good the next couple years here. I mean, they're at a low valuation, 17 PE. I've been holding this one for a long time. I held it when it was over 60, and now it's here at 40. I'm still holding it. So I'm just gonna hold Supermicro shares. Oh, hey, all the apps I have are in the link tree in my bio if you want to get them. I'm not sure what app you're talking about. Like this one's called Robinhood. You can just type it in the app store. It's called Robinhood, or it's in the link tree in my bio. This one's called Mumu. Yes, sir. Yep. Oh, yo, that's what's up, Pinky. You got MU. Yo, nice. You must be up like crazy on your shares after hours. What's up? Staying short, more downside. Hey, what up, Fairway? Yo, I don't blame you for that. A lot of people are concerned with the tariffs and all that. Like if we look at the QQQ, for example, the if you want to buy the QQQ, don't buy QQQ, buy QQQM. It's actually the exact same ETF with the lower expense ratio. And look at them the past couple months here. It has fallen off a cliff. It went from 220, now it's at 197. So this is one I'm looking to buy because I literally use all these companies individually. I use Apple, Microsoft, Nvidia, Amazon, Broadcom, Meta, Netflix, Costco. I use all these companies. So this is an ETF that I really like, QQQM. But it's really tech heavy. Need to look at TEM, brother, my biggest holding. Yo, Elijah said Tempest AI is this guy's biggest holding. And you know what's crazy? Nancy Pelosi's husband bought the stock, and ever on that news, the stock went up to $90, pretty much just on that news. But check this out. They're in a very niche industry. This is what I like to see. They're in the genomics business. And look at this. The revenue is up 30% year over year. So from their actual fundamentals, I like the growth. So that's their genomics. But look at their data and services. This is like the hidden gem here. It's up 45% year over year. So that's great. The sales are growing like crazy. But there is one thing that I'd be a little careful of. They're losing money right now. But if you do notice in the most recent quarter, they only lost 13 million. That's a great improvement from what they used to lose. So as long as they can keep that up, I think that one will be a winner in the long run. Again, not financial advice. Don't listen to me. You could lose a lot of money on a stock. So always do your own research. Should I put all my money on Enron? Hey, they're still public. Ticker symbol EOG. Oh, here we go. QQQL. Is that what is this? This looks really, there's no volume on this stock. Look at these candles. Yeah, 7,000 of volume. This is a Canadian ETF. There's only 2 million of assets under management. Look at that. So there's only $2 million total in that ETF. So I'd be careful with that one. I'm not sure what that is. Need to see major capitulation. Yeah, I feel you, Fairway. MU and Nike. Yo, Vin, you're not going to like this, so check this out. I actually sold all my Nike. Yeah, you can see where I bought it. And check this out. I decided to sell all my shares of Nike for a loss. I sold it at a 7% loss. And that's because I'm a little nervous. They lost their growth. Like if we go to their footwear revenue, it's down 12% year over year. They report earnings on Thursday. Wait, that's tomorrow. So Nike reports earnings tomorrow. So keep that on your radar. Look at the PE ratio. It says it's at a 22, but if we look at what the EPS is going to be the next 2 quarters, look at that. It's only going to be 27 cents of EPS next quarter. So anyway, I made a whole video about why I sold Nike. I'm a little worried about them, but I might buy back into them if they go crazy low. Are you bullish on Disney? I do own shares of them. I'm not like crazy bullish on them. I'm just going to hold shares for the long run. Their streaming service is now the most profitable it's ever been. They own ESPN, Hulu, Disney Plus. And they're, politics aside, I do like Disney. Or their stock. They reported today good earnings and wait, Nike did? Wait, no. Wait, let me check. Oh wait, it says they're up 3% after hours. Oh, look at that. You're right. Maybe is today? Did they report earnings on? Oh no, today is Thursday. Oh, my time frame is just all messed up in my head. Anyway, yeah, nice if you own Nike. They're up 3.5%. It's at 74 right now. What did I sell it at? I sold all 17 share, only 17 shares. I sold it at 79. So yeah, I honestly for Nike, I hope they do good. Nike and AMU, yeah, they both did good. Today is Thursday. Nike reports at 5. Yeah, thanks for that, Ranger. You're right, man. Uh, oh, here we go. Check AMD. Did AMD report earnings? Hopefully they're up. No, I don't think they report earnings. Yeah, so here's AMD. I do own this one, by the way. I'm down a good chunk on my AMD position. We're down like 15% all time in here. But yeah, look, we have basically 13 shares of AMD at $124 a share. So I'll give you a quick analysis on them because I do like them. Look at their PC GPU market share, 17% market share. That's pretty good to me. But if this is a data center play, in my opinion, look at this data center revenue growth. It's up 69% year over year. That's phenomenal growth, in my opinion. That's what I look for in a company. So that's why I'm buying AMD personally. Don't just follow me, but the free cash flow is over $1 billion. The sales were up 25%. The net income, there was a one-time adjustment that hurt their net income. Anyway, they have a great balance sheet. AMD's cool. I might be biased though because I own them. Uh, Thoughts on SIRI as Buffett? Buffett owns 1/3 of the company. Really? Let's check this out. So let me go to the shareholders down here. Berkshire Hathaway, you're right. So Berkshire Hathaway, which is Warren Buffett's company, owns 35% of the shares. He might own even a little bit more. But the stock has not done too good, unfortunately. And that's because they had some like merger or spinoff that hurt their net income. Like look at their net income right there. They lost 3 billion, but that was a one-time adjustment. Because if you look at their operating profit, they usually just make 400 or 500 million a quarter. So yeah, they have a nice dividend. You get a 4.6% dividend. Again, it says the payout ratio is negative. That was because of the one-time adjustment. So yeah, actually they're pretty decent. They own Pandora. Yo, Ian said Riot. So let's check out RIOT. So this is Riot Platforms. This is just a Bitcoin mining stock. So this pretty much follows Bitcoin. But here's the thing. Bitcoin's, not too far off all-time highs, but this stock is crazy off all-time highs, which is unfortunate. So yeah, look at the revenue right here. 85% of it comes from their mining of Bitcoin. What about engineering? How's their engineering revenue doing? Yikes, it is not done good. What about the other revenue? So anyway, you're buying this one for the Bitcoin because if you go to their balance sheet right here, this is what you look for on these stocks is the balance sheet. All those assets are the Bitcoin that they own. And so anyway, I would rather just own Bitcoin, but BBAI, let's see. This is Big Bear AI. So I don't love this one. They're only worth 850 million, so they're a really small company. And here's what just happened with them. So if we look at their most recent quarter guidance, the orange line, the analysts were expecting 54 million of revenue. They only reported 43. And on top of that, they lost a boatload of net income. Check this out. If you look at their net income, they lost 100 million, which again, the whole company's worth 800 million. They just lost 100 million. And the quarter before, another 12. So anyway, I just be careful with this one. This could maybe be a fun swing trade or something, but I wouldn't put a lot of money into that one. I couldn't trust a lot as a long-term hold, but they could still do good. I don't know, but that's just one that looks risky to me. Um, oh yeah, when I sold Nike earlier, this is the stock I bought with some of the Nike proceeds. I bought a bunch of APH stock. You can see where I bought that one. And I've been buying Comfort Systems. But I try to go over stocks you've probably never heard of before. I don't just want to go over Google and Apple a bunch of times. Here we go. What do you think about Walmart? Yeah, no problem, bro. Walmart. So this is an amazing grocery store. What's their market cap? 680 billion. I mean, they're huge. I mean, the stock price looks like Nvidia. I mean, they've done incredible. A lot of people go into Walmart is like a defense play. Yeah, they own Sam's Club as well. Sam's Club is a great asset to own. It's kind of like a Costco copy. Yeah, they pretty much just make 5 billion of net income a quarter. Bro, that's 20 billion a year. I actually kind of own their competitor. I'm bullish on both. I would happily own Walmart. Actually, Walmart would probably be the safer play than me buying this. But I bought Sprouts Farmers Market, if you've heard of them. They're like a healthy grocery store. They actually have no debt at all. They're a debt-free company, which is kind of cool. Um, Uh, ooh, here we go. GRRR. So let's check this one out. So Gorilla Technology. Um, let's see here. So this is a $430 million company. So another small one, but look at the stock. It's done decent, but let's go look at their fundamentals here. So security convergence, huh? What are their sales? So this isn't even 2024. So I don't think they sell anything right now. Yeah, they don't sell any product right now, I don't believe. Or these are just weird numbers. So I would just stay away from this one, you know. Um, I it's just really tiny of a company. Yo, here, okay. Wait, Infinite Cubing says ABBNY. That's a long ticker symbol. So I don't know what this is, but I'll check it out for you. Well, whatever it is, look at that. It's done amazing since 2019. It's pretty close to an all-time high. So yeah, congrats if you own them. They pay a dividend, a 1.7% dividend. So electrification, let's check it out. How is it doing? So yeah, look at that. It's up 10% year over year. What about their motion revenue? Up 5%, process automation up 4%. So net income down here, yeah, they pretty much just make $1 billion a quarter and they pay half of that out in dividends. So they're cool. Oh, hey, if y'all want to support me, I don't sell anything. I don't got a course book, Discord. I don't got none of that. But I do have a YouTube channel. I'm streaming on YouTube and TikTok right now. So if you'd watch the stream from my YouTube channel, I'd really appreciate it. And you can replay it if you missed something. Kevin says Lucid. Okay, so LCID right here. I feel bad if you own this one because this company just burns shareholders. They issue shares when the stock is at a suppressed price and they lose a lot of money. So the whole company, if you look in the top right, the market cap is 6.9 billion. So we'll just round up to $7 billion. But look at the net income they lose every quarter. They pretty much lose $2 billion plus a year of net income. So I'd be really careful with Lucid and their profits here. I just want to see this one finally start to make some money. So yeah. I know a Prince who said he'll sponsor your channel. I wish. Uh uh can you look at MU? Yeah, let's go. I've seen a lot of stuff on MU. Let's check them out. So yeah, they're up 5% after hours. Look at that. They're at $108. And yo, Ellie chat or Ellie, thanks so much for the rose. I really appreciate you, friend. But look at this. Here's the best part about I don't have their numbers quite right now because they just came out, so it hasn't updated. But here's last quarter. They probably just continuing this amazing growth. I mean, look at the growth of this computer networking revenue. It's up 150%. Look at their storage business unit. That's up 165%. So both of their main segments of business are growing like crazy. And they just crank money now. You know, they used to lose money. Now they're very profitable, making net income every quarter. So MU is pretty cool. I kind of own their competitor. I own AMD. MU is probably the better whole or better buy than AMD. So nice. The trade desk, yo, TTD right here. I feel bad if you own this one because look at this. The stock has collapsed. If you're wondering, like, hey, what happened on earnings? Why did the stock collapse? Unfortunately, Netflix dropped them. So Netflix used to use Trade Desk to find advertisers for them for their new ad tier subscription. Now Netflix said we're just going to do it ourselves. So they lost Netflix. That's why the stock dropped. I think it's oversold though. Like, did Netflix really make up this much of their market cap? I don't think so. So it looks oversold, but they did just make a record amount of net income. The revenue is up 23% year over year, and the net margin was 25%. They have great margins. So they're a pure advertising stock. They're probably oversold right now. So probably they're not bad actually. I do like them. Is that only American stocks? No, I can check out pretty much any stock. Uh, Let's see. Tempest AI. That's TEM. Yo, this one was bought by Nancy Pelosi's husband. He bought the stock and the stock rallied up to $90. It's a niche company. Look, they're in the genomics industry. Look at this. It's up 30% year over year, so that's good growth. And same with their data and services. Look at this one. It's the real winner. It's up 45% year over year, so that's some nice growth on Tempest AI. They do lose money right now, but they're not bad. Oh, so here, what's up, Nolan? TWLO. So this is Twilio, I believe. That's how you say it. Twilio. I think Kathy Wood owns this stock. What's their market cap? They're worth 15 billion. Wait, they're huge. So Twilio Communications. Well, look at that. It's up 12% year over year. That's not too bad actually. So 12% revenue growth. What about So yeah, sales were up 11% year over year. Net income, they're still losing money. The trend is getting a lot better. Like they used to lose over 100 million a quarter. Now they only lost 12 million. So the trend is getting a lot better. I bet by like this time next year they'll be profitable. And the assets are declining since they lose money. You know, the assets have to decline, but they don't have much. They don't have any debt. It looks like. So actually, they're like a mixed bag there. Thoughts on NVO? What up, Marcus 10? So this is the company that owns Ozempic. Has anyone heard of that like weight loss prescription? This is the stock that owns it, NVO. Yeah, look at that. 93% of their revenue comes from that right there, which is crazy. And look at the net income they make. It's ridiculous. They're making like 3 to 4 billion of net income every quarter. So they're not a United States-based company, but still really interesting. Kind of like Eli Lilly. The stock has been absolutely hurt though recently. I think it's because the FDA allows other people to sell the same product, but they're gonna stop allowing that. Yo, what up, baller? Yo, please don't spam. I got you, bro. We'll check out AEO. Should I sell AEO stocks? So this is American Eagle. Looks like they're up after hours, probably with Nike. Nike's up after hours. If y'all saw that. So this is American Eagle. Would I sell it? Well, look at this. They have a 4.2% dividend, and look at that. The payout ratio is only a 30%, so they have a healthy payout ratio. Again, they just sell a commodity. You know, you're not going to probably outperform the S&P in the long run just owning this stock, but they're trading at 7 times PE. You know, look at the net income. That's pretty good. 60 to 100 million. It is growing. So, you know, nothing's really blowing me away here, but yeah, dang, look at that. The stock is the same price it was back in 2019. So, or dang, it's the same stock price it was back in 2005. So yeah, you get the 4% dividend, but that's one you probably don't want to own in the long run. So yeah. Do you think a recession will happen this year? Yo, probably, Stevie. But hey, my portfolio, I believe, is ready for a recession. You know, let me show you my Robinhood account. I'll be quick about this. Yeah, here's my main taxable account. We were down 0.42% on the day. Yeah, how'd y'all's portfolios do today? So yeah, we were down a good chunk here. But here are all the stocks that we own in here. Like we got McDonald's, Google, Meta. Yeah, here's my total lifetime change, my total percent change. So luckily we are up on every single holding in here. Yeah, if you guys got any stocks you want me to look at, let me know in the chat. I'll check them out for you. And if y'all want to support me, go to my YouTube channel. Go watch the stream from my YouTube account. I'm streaming on there as well. Oh yeah, here's my Roth IRA where every stock in our Roth IRA is down. But anyway, we also have a Webull account right here. Yeah, there's my Sprouts Farmers Market position, but we were up 0.16% on the day, but don't be fooled all time. You know, we're down 14% in here. So again, don't listen to me. This ain't financial advice, but yeah, someone said, yeah, Infinity Cube, thoughts on Tesla. So let's check it out right here. There's some good news and there's some bad news about Tesla. It's like a mixed bag here. Like one of the bad news is they're very overvalued. They're trading at 115 times net income. We can kind of see their total vehicles delivered. It's up 4% year over year, not huge, but because look at their automotive revenue. Their automotive business is actually down 5% year over year. So they lost the growth of their automotive business. But look at their energy generation business. It's up 112% year over year. I mean, look at this on an annual basis. I mean, this is incredible growth. I mean, this is like a secret winner for Tesla, this energy storage business. So anyway, um, I'd be, it'd be tough. They're definitely not going bankrupt, but I could see them going lower. I just be careful with that one. Oh, so anyway, here we go. What up, music, bro? He said, "Look at Elf right here." Um, at my age, I've been through a few recessions. Hey, Pinky, what are the best stocks? I heard Walmart and McDonald's are great recession stocks. So here's Elf Beauty right here. And if you're wondering, like, hey, what happened to this stock? Why has this stock fallen so much? It's because they're losing their margins. Yeah, look at their net margin right here. A year ago, their margin was 9.9%, 10%. Now their margin's only at 5%. Their margins have fallen in half. And that's when their sales are growing. So the sales are up 31%, but the net income is down 35%. So they're losing their margins. So the valuation's looking really high, but I still like the sales growth on this one. I just like to see them get more profitable. Yeah. So they're trading at 37 times net income right now. And the net income might be artificially suppressed. But yo, what up, Henry? He said POET. What do you think is going to happen with Bitcoin? You know, I don't know. Um, that probably wasn't a useful answer. I apologize. But here's Poet Technologies. This is a $300 million company. They're a Canadian company as well. So yeah, I'd be careful just because they're not a big company. So yeah, look at their revenue right here. This is what I don't like to see. Look at that. The revenue is only $3,000 in the most recent quarter. I'm sure someone in here makes more than this company. So yeah, they make 3,000 a quarter, and dang, out of that they lose 12 million of net income. So in my opinion, I'd be very careful with POET. I'd just probably stay away from them. I mean, the stock has done decent though. I don't understand why Nova's reading at a 24 PE and Eli Lilly on 75. Yeah, Eli Lilly has had a lot of one-time adjustments, making their net income go down. So check this out. If we look at Eli Lilly's operating profit, look at this. This is what you really want to look at. It's 5.8 billion. Do a multiple on this. But like, look at last quarter. It says their net income was only 970 million. Well, it should have been like 4 billion. So anyway, the PE's been artificially suppressed. I'll be really quick with this. Look at Eli Lilly. They sell a bunch of different prescriptions here. Like, look at Mounjaro, for example. This one is up 60% year over year to a new record. And this is their Ozempic copy. Has anyone heard of Zepbound? Look at this. Like, a year ago, it was 175 million of sales. Now it's 1.9 billion just in one quarter. So this is an insane growth company. I came so close to buying them, but I'd happily own that stock. Do you think Tesla will continue to keep dropping? I think so. Yo, Pinky, are you talking about P&G, Procter and Gamble? Is that ticker symbol PG? So yeah, Procter and Gamble. Oh yeah, this is a safe recession stock. So if we go in a recession, you can't go wrong with the Procter and Gamble. They just return you like 7-8% of your money back a year. The PE ratio is fair. It's a 26. Yeah, we can see their organic growth. But yeah, look at that. They're in so many different industries, which is so cool. And if we look at the net income right here, it's so consistent. They just make 3 to 5 billion of net income every quarter, and then they pay out a lot of that in dividends. You get a 2.4% yield, completely sustainable. So PG is a cool one. Micron stock just popped after hours. Yeah, MU stock, they deserve it, dude. Look at them on the one day. They're up 5% after hours. So nice, bro. Um, let me go to the news tab right here. Let's see. Micron earnings, revenue beat, data center sales triple. Their data center sales tripled. EPS beat, strong guidance. So hey, I get why that one's up after hours. Honestly, they should be up more. I mean, I haven't done any real research on it yet, but sounds like great news. So congrats if you own them. So here's KITS. I don't know if this is the stock you're talking about because this one's very low volume. They're only worth 350 million. So they're an eye care company, so they sell contact lenses. So cool, and they sell glasses. So they sell a commodity, but it's something people are always going to need. Here's their revenue. They should be profitable. I'm going to hope. So look at that. They just made 2 million of net income for the first time. That's actually pretty, and that's real. So actually, this one's not terrible. Again, it's a really small company, so I'd be careful. But yeah, 360 million is really small. $1.56 EPS. Yeah, that's a good like 10% beat. Nice. Tomorrow in live crypto summit meeting, we hear more about Bitcoin. Oh, so hey, that'll maybe move the stock or move it tomorrow. You've been in Procter & Gamble for 20 years, yo, dude. You must have a great dividend yield on cost. Like right now, if I bought it, I get a 2.5% yield. I bet like your yield on cost is crazy. Check Eric, ERIC, he said. Ericsson Telephone. Well, the stock is kind of flat since 2019. It hasn't done too great, but I'll check them out for you. Let's see. They do networks. So yeah, look at their annual network revenue. It's down 7% from the previous year. Cloud revenue is down 1%. So they're not seeing much growth. Yeah, the sales are only up 1% year over year. That loses to inflation. And actually, the net income's good. I mean, they sometimes lose money, but yeah. Oh, hey, this app is called Mumu. It's in the link tree in my bio. It's the first link there if you want to get it. Let's see here. Mercutio said Nike. Yeah, Nike reported earnings today. Check this out. If we look at them after hours, they're up 2.5%. Hey, not bad. I feel bad. I sold all my shares up here. I sold all 17 of my shares at $79. So yeah, they beat like crazy on that. To be honest with you, these EPS estimates were low. I mean, look at that. They were expecting 27 cents of EPS. I mean, they always beat. Look at the past 3 quarters. They always beat by a good chunk on their EPS. So I was expecting them to beat, but yeah, 50 cents of EPS. Still their dividend cost 40 cents a quarter. So they have like a high payout ratio. Anyway, but analysts were expecting that. We grew up across from Procter and Gamble that worked there. Oh, that's really cool. He probably got like stock options or something. That's really cool. But give me one second. Okay, we're back. Had to get my water. So, yeah, if you guys got any stocks you want me to look at, let me know. I got you. Oh, the revenue was down 10% year over year on Nike. Yeah, that I was expecting that. So, anyway, here's my portfolio on the day. We were down 0.42%. Yeah, Roth IRA, we were down 0.5. We actually just bought a share of Amazon. Literally, we're up 1.5% on it. We bought it yesterday. Amazon's a cool one, but I kind of own a lot of the Mag 7. I own Google right here. I own Meta. I own Amazon. So yeah, here are all the stocks that we own in here. Here's my total equity. My larger stocks are at the top. And then here's my total percent change. So luckily we are up on every stock in here. We're just barely up on Google. Look at that. We're up literally 0.1% on Google. So holding on a thread. How about Berkshire Hathaway? Bought some on Monday. Oh yeah, then we'll look at SMCI. I got you. I do own that one, by the way. So here's Berkshire Hathaway. Has anyone heard of Geico? Geico is owned wholly by Berkshire Hathaway, so that's their insurance business. Let's see how Geico's doing. That's up 10% year over year. Hey, not bad. What about their pilot? I don't know what that is. Well, that's down 25%. What about McLean? Hey, that's up 8%. So anyway, they just make so much net income. It's ridiculous. Look at that. They made 20 billion of net income just in the most recent quarter. Then they do like stock buybacks. But yeah, let's go look at SMCI real quick. Yeah, here's my like risk on portfolio. Again, don't listen to me, not financial advice. We're down 15% all time in here. But look at SMCI. We are up 50% on this stock right now, but this one's so risky. I'd be really careful with them. This is a swing trade for me. They're trading at 17 times net income, which is a very, fair valuation, I think. Yeah, look at this sales growth. Again, they just sell a commodity, but I like the growth here. So let's see. Oh, hey, Coy, this app, I'm not sure what app you're talking about. All these are in the link tree in my bio. Like this one's called, you can just type it in the App Store. This one's called Robinhood. Second link in bio. This one's called Moomoo. First link. Can you give advice on CEG? So yeah, bro, I actually own a lot of that stock. Check this out. I own 15 shares of Constellation Energy. This is the company that owns 50% of all the U.S. nuclear energy facilities. So this is the largest nuclear energy pure play. And that's why I own them. I'm only up 6% on them, so I'm not up a huge chunk on them, but I do own them. They have a nice dividend growth and a buyback program. And they just acquired a company. Great acquisition. So, yeah. I would... a price to get in? Here we go. SMCI going down big. Yo, you think so, Pedro? Yo, Robbie, thoughts on Tesla? Yeah, let's check out Tesla real quick. So I'll be quick with this one. They're at an expensive valuation. They're trading at 100 times net income, but there is one good thing, the energy business. Look at this. It's only 10% of their business, but look, it's at a new record. It's up 67% year over year. So year over year, it's actually up 100%. But if we look at their automotive business, it's actually down 5% year over year. So that's why I think that the stock is, been kind of down/flat. They're at a high PE and they're not growing anymore. The sales are only up 2%. That doesn't beat inflation. Anyway, the valuation's high, but they're not going bankrupt. They might go down lower. I'm just staying away from that one personally. Rich Tech Robotics, what's the ticker symbol for that one? Is Hood a good buy? Yo, I own some Robinhood. Check this out. I got 5 shares of them. Robinhood mainly just moves with Bitcoin. So whatever Robinhood does, or let me actually analyze Robinhood for you. Oh, hey, 23, this app is called Moomoo. It's in the link tree in bio, the first link there. But yeah, here's some statistics about Robinhood. They have 25 million net funded accounts. What about the revenue? Yeah, look at this revenue growth. It's at a literal new record. It's over $1 billion, up 115%. And so is the net income. Net income just literally was 900 million. That's actually crazy. 900 million of net income. So anyway, I do own that one. I might be biased, but oh yeah, Rich Tech. Oh, RR. Oh, that makes sense. Okay, here we go. So Rich Tech Robotics. So they're only a $240 million company. So that's a really small market cap. So I don't love that, So if we go to their revenue right here, yeah, look at that. They only did $1 million of revenue. So that's what you got to be careful with. Only $1 million of revenue for that robotics company. I own a different robotics company and I'm down 17% on them, but this is ticker symbol SYM. This is Symbotic. They're a warehouse robotics company, and look at their sales. I like this one because they actually have sales. It's growing like crazy. They're not making money yet, so this is still a money losing company, but they're losing less money than what they used to. So yeah, I own SYM. Um, what? No. Oh, watch out for people impersonating me. No, I don't have a Discord, WhatsApp, Telegram. I don't got none of that. So yeah, watch out for people impersonating me. Uh, how is Cube? Yo, that's my highest yielding dividend stock down here. So, oops, that's Disney. Oh, CubeSmart right here. Yeah, this I've been buying the dip on them. Look at that. I keep on buying them every couple days in here. But look at their dividend. They actually have where is it? A 4.9% dividend yield. That's a completely sustainable dividend payout ratio. I just made a whole YouTube video about this stock if you're curious. So I really like them. NVO, what up, Stevie? So yeah, this is the company that owns Ozempic, that weight loss prescription. They're a huge one. $350 billion company. You know, this company is huge. So, 93% of the revenue literally comes from their Ozempic, uh, prescription. And look at the net income. The bottom line is crazy. They're making 4 billion, 3 to 4 billion of net income every quarter. So that's what's cool about NVO. Very, very niche company. I like them. Planet Fitness, yo, that's PLNT, I believe in. I actually really like Planet Fitness. So the valuation's pretty good on this one. So look at their company-owned stores. They're actually growing like crazy. Like, look at this on an annual basis. Even before 2019, and 2019 was 159 million. Now it's 500 million. That's an incredible growth. And look at their franchise stores. This is the high margin franchise fees they get. Look at this. It's up 11% year over year. So that's what's cool about Planet Fitness. If you look at the free cash flow right here, they're making so much free cash flow every quarter, and net income. The net income's even better, making 30, 50 million of net income a quarter. So Planet Fitness is one I actually have on my watch list. Hey, what up, Bill? Let's check out TPL. Yeah, what's up, man? TPL. So Brookfield Asset Management. Yeah, we'll check out BAM too. Yo, if y'all want to support me, I'm streaming on YouTube and TikTok right now. So I'd appreciate if y'all would head over to my YouTube channel and watch the stream from there. Because my TikTok account keeps getting banned. But here's Texas Pacific Land. They collect so much royalties from their land and stuff. So they're in the oil and gas industry, but they also collect like royalties. So look at that. They pretty much just make 100 million of net income a quarter. And then they pay out special dividends as well. They have their normal dividend, then they sometimes do special dividends. They've had some insane stock price appreciation, and they're now in the S&P 500. So I believe that was what really, I was like, why they rallied up back here a while back. Like, they got added into the S&P. I don't have much thoughts on them. I apologize there. Thoughts on Target going down? Apparently Target is the most oversold stock in the S&P 500 right now. And yeah, look at that stock price. That is not good. And that's because they're really losing to their competitors like Walmart and Amazon are really beating them out. Look at their net income year over year. It is down 20%, but they're still really profitable. Look at that. They make pretty much $1 billion of net income a quarter. And then look at their dividend. They have a 4.3% yield and a 50% payout ratio. So they can afford the dividend. I assume they'll probably even do some stock buybacks or something. But yeah, I own their competitor. I'll show you that right here. So in terms of like a grocery store, I own Sprouts Farmers Market, ticker symbol SFM, if anyone's heard of that healthy grocery store. Let's see here. Rocky Lab. Hey, what up, Muffins? Yeah, Rocky Lab. This company's interesting. They send rockets into space, and they actually have a backlog of over $1 billion of orders. So they have over $1 billion plus of orders that they haven't fulfilled yet. And look at their space systems revenue. This is what's incredible. This is why I like them over like ASTS. The sales are up 75% year over year. I mean, that growth is incredible for Rocket Lab. So that's why I really like them. Their sales are growing like crazy. You still got to be careful because they're still losing money. Look at that. They're losing 50 million a quarter, but cool. Oh, yo, music spot. My YouTube channel is called Nathan Robert. My YouTube channel is also in the link tree in my bio. So yeah, I'd appreciate that. Yeah, I'm streaming on YouTube and TikTok right now. So anyway, here's BAM. I stream on both platforms at the same time, but I read both chats. Don't worry. Actually, I read YouTube chat first, But anyway, here's BAM Brookfield Asset Management. This is a really cool company. They manage a bunch of assets, obviously, as their name implies. But look at the profits they're making. Over 100 million a quarter now. In the most recent quarter, it was up 95%. So that's huge growth of their profits there. What about the stock price? So it has recently fallen here. I'm not sure why, but yeah, they have a 3% dividend. How about wait, are you talking about Ford? Do you look at compound annual growth rate when you analyze stocks? Sometimes, I expect the S&P 500, like this is honestly this should be the backbone of your portfolio, the S&P, because this will just, compound at 7 to 8% a year. And and I would happily own all these companies individually. Like invest in what you use, invest in what you know, like Apple, Nvidia, Microsoft, Amazon, Meta, Google. I use all those companies pretty much every day, so I love all those stocks. Um, yeah, Kevin, I think he meant Ford stock. So I don't love Ford, to be honest with you. Like, look at him. The stock is lower than it was back in the year 2000. So that's kind of not great. So Ford's stock has gone nowhere, but you mainly buy this one for the dividend. Look at this. You get a 7.8% dividend. That's a huge qualified yield. And the payout ratio is a 50%. So they can't afford the dividend. But, with Ford, I just don't expect you to outperform the market in the long run. You know, you won't outperform the S&P, but you'll probably get like 4 to 5% total return a year, maybe. I don't know. Can you check out a stock called GUBRA? Is that the ticker symbol? GUBRA? If there's a ticker symbol, I'll check it out there. Oh, here's an interest. Wait, that's an ETF right here. SOXL. So let's check this out right here. So this is 3X Bull Shares ETF. So it's the semiconductor ETF. So yeah, look at this. If you go to their top holdings, uh it's a leverage, so there's options, so it messes it up. But it's like the inverse of the semiconductor. Or I don't know. It's just 3X semiconductor. It has absolutely collapsed. So it's just very volatile ETF. Oh yeah, they don't allow any 3x leveraged ETFs anymore. There can no longer be any 3x leveraged ETF. Did y'all know that? Or it's like a new rule. Um, is it bad to me all those big companies that make up it like no? Well, the S&P 500 is market cap weighted, so the only reason those stocks are up there is because they have the most market cap. Like here, I'll just show you. Oops, show you that for example. What I mean. Doing this with one hand here. So yeah, if we go to the mega caps right here, yeah, look, the S&P weights them by market cap. Look at that. Nvidia just passed Microsoft. Nvidia is now bigger than Microsoft. They're always like swapping places, but look at that. Then there's Amazon, Google, Meta, Broadcom, then there's Tesla, Walmart, Visa, Exxon, all these big companies. Netflix is worth 400 billion. Isn't that nuts? I own McDonald's. Actually, if I go over here to my Robinhood account, every single company in here is in the S&P 500. So I kind of only own S&P 500 companies like Meta, Google, Constellation Energy, McDonald's. I love these dividend paying stocks. And here's my Roth IRA. I also own Amazon in here. And I own a really risky stock. I own frickin' Build-A-Bear Workshop stock. We're down 3.5% on them. So that's just a really risky one. What about Whole Foods? Whole Foods is owned by Amazon, right? But I do own, or maybe you mean Sprouts Farmers Market. I own Sprouts Farmers Market. This is a debt-free company, actually. Very interesting. I have a watch list here of stocks with zero debt. Just because they have zero debt doesn't mean they'll do good. But here's a watch list. I got Yelp, and I own Yelp, for example. I do own some Yelp stock. DocuSign, Reddit, Instacart is debt-free. Palantir, Duolingo, Poppy drinks. Poppy was originally on Shark Tank. Did y'all know the Poppy drink was originally on Shark Tank? And now Pepsi just bought them for $2 billion. So that was crazy. What's the best ETF? The best ETF in my opinion is VOO. It's just the S&P 500, or really any S&P 500 ETF. You should just get on average 7 to 8% of your money back a year. Not financial advice. Don't listen to me. Abdi, yeah, he said Amazon stock and Nvidia. So here, I'll look at Amazon here because I own this one. I might be biased, but look at their AWS business. This is what I love about Amazon. It makes up most of their market cap now. It's the most valuable part of Amazon is not their website where you buy stuff off. It's actually their Amazon Web Services, and this is up 19% year over year. Incredible growth. The net income growth is actually the best part. They just made 20 billion of net income for the first time. If we zoom out, they used to lose net income every quarter. So Amazon, they're cranking in the money, and they're so innovative as well. So Hems to the S&P 600 thoughts. Oh, did they? That's actually really interesting. So yeah, this stock is now in the S&P 600. This one I really like for the growth. I mean, just look at this quarterly sales. It's up 95% year over year, and this company has no debt at all. Hems is a debt-free company, but they can no longer sell their highest margin weight loss prescription. And I actually just saw an ad in the newspaper. They spent like millions of dollars getting it to get them for the FDA to reallow them to sell their highest margin product that they got revoked. Yo, what up, Catherine? RCAT. Let's check out RCAT. So this is Red Cat Holdings. This company actually sells drones. So this is like a defense company. They sell drones, but again, they're only worth $400 million. So this really isn't a great drone play. And look at the sales in the most recent quarter. The sales were only $1 million. $1.5 million. So yeah, and they lost 13 million of net income on that. So in my opinion, be very careful with RCAT. So hopefully that was helpful. I'm not trying to bag on anyone's stock, of course. I just like to show you the numbers for yourself. You can draw your own conclusion. This isn't financial advice. Like again, you could lose a lot of money on a stock, like I did right here. I'm down well over $1,000 on this stock. So make sure you do your own research. And this isn't financial advice. Make sure you have a diversified portfolio. Oh yeah, here we go. Nvidia. Is it bad to be in those bigger companies separately? No, I don't think so. Because the financials are good, the valuations make sense. Like here's Nvidia, for example. Look at this is what's so impressive. They have an 18% PC GPU market share, so a huge market share for GPUs. Their automotive revenue is up to 570 million. That's incredible. But look at the bottom line here. The actual profits of them is the best part. They made 22 billion of net income just in the most recent quarter. So that's incredible. And until this net income growth goes away, I think Nvidia is always going to be a buy. No reason to sell them. Again, I don't own any Nvidia. I kind of own their competitor. I actually own AMD stock, and I am down, a good 25 or no, I'm down 15% on AMD. But yeah, we own 12.95 shares at $125 a share. So yeah. Here we go. Arthur said Palantir. Yo, let's check out Palantir stock. I think that's a Kathy Wood stock. Wait, let me check. I haven't looked at her portfolio in a long time. Kathy Wood's portfolio. Yeah, look at that. 6% of her portfolio is in Palantir. So what's really cool about this company is they have no debt at all. Palantir is a debt-free company, and the government literally is their best friend. The government hands Palantir money. Look at this year or quarter over quarter. It is up 40% year over year. That is incredible growth of their government revenue. And same with their commercial revenue. This is up 31% year over year. So the business is just growing like crazy. And they have a monster balance sheet, no debt at all and 5.3 billion of cash. Isn't that incredible? 5.3 billion in cash. So yeah, let me know what you think about Palantir. I do like that one. But the only thing I don't like, the valuation is still really high. The valuation on that one is high. Corey says buy Tesla stock, dude. Tesla, this is another one. It's like the fundamentals are good, but it's kind of like Palantir. Well, actually, Palantir's fundamentals are a little better, but look at the valuation. I mean, Tesla's trading at 115 times net income. It is a really high valuation. Their total vehicles delivered was only up 2% year over year. So that actually loses to inflation. Yeah, if we look at their automotive business for Tesla, Tesla's automotive business was down 5% year over year. But if we look at their energy business, it was up 100% year over year. I mean, on an annual basis for the full year 2024, that's incredible. It was 10 billion of revenue. But again, that's only 10% of their revenue, but it's gaining a bigger chunk now. But again, I consider Tesla when it goes lower, because I honestly think Tesla might go lower. But it could not, because historically it's its own thing. It has its own cult following, and it just Trade's expensive sometimes, but some stocks are like that. Here's Rocket Lab, for example. This stock sends rockets into space, and they actually have a huge backlog, over $1 billion backlogged of orders. And look at their space systems revenue. This is why I like them. It's up 75% year over year, so that's real growth, and that's incredible growth on Rocket Lab. That's the best part. But they are losing money right now. They can easily afford it, but they're losing 200 million a year of net income. Are you a fan of ETFs? Yeah, I love ETFs. I love VOO, QQQM, USD. Are you talking about the crypto USD? Yeah, I don't really own any crypto. Yeah, here's my portfolio. We were down 0.42%. Yeah, how'd y'all's portfolio do today? Any advice on trading futures? I just wouldn't do that. If I'm going to trade something, I'd rather just trade an option instead of trading futures. It's just a different world, I think. But that because I understand it more. I don't really understand that too much. But anyway, um, how about ACHR? So I just like to show you the numbers for yourself. Here's why I'm going to stay away from Archer Aviation. And I mean this in the nicest way. Here's why I'm going to stay away from them. If we go to their revenue right here, it says no data because this company doesn't sell anything. They don't sell a product or a service. They literally have never sold anything. And if we look at their net income, they lose over 100 million of net income a quarter. And in the most recent quarter, they lost 200 million. So that's what I'd be careful with on Archer Aviation. And the balance sheet is good though. Like their assets are growing. But again, I don't like that they don't sell anything and they're losing money. So you're kind of buying a startup here. They do have contracts, though. They have contracts that will recognize revenue in the future, but that's just one I'd stay away from personally. I just look for a different one or a different stock. What up, Catherine? SMTC, Samtech. Okay, let's check this one out. I haven't heard of this one. That one sounds interesting. So they're a $3.5 billion company. Not bad. What do they do? So analog mixed signals. So that's like sounds niche. Internet of Things. So it's a mixed bag here. What about the net income? So the net income is a little choppy, but in the most recent quarter, they did make 40 million of net income. So that's the good news. They did make money in the most recent quarter. So the sales were up 30%. Nothing's really blowing me away here to really want to buy this stock. Like look at them on the weekly, like they're lower than they were in 2018. So I just be a little careful with that one. I, yeah, I've got stocks you'll be surprised not knowing before with huge upside. You ready? Check out Lyft. Oh yeah, Lyft. This is yeah. Let me hear them, Arthur. Yeah, if you guys got any stocks you want me to look at, let me know. I'm going to end the stream here in a little bit because I got to go in like 10, 15 minutes. But I will happily look at y'all stocks. And if you want to hit the follow button, we just go live every day, twice a day, actually. This is our second stream of the day. We're actually going to be doing another live stream later tonight if you want to join in. But if you want to hit the follow button. But look at Lyft, for example, in the most recent quarter. This is like Uber's competitor. They just made 60 million of net income for the first time. That's incredible. And the free cash flow is even better. Look at this free cash flow growth. Insane on Lyft. So that's what I like about them. They're still growing. Sales are up 26% year over year. So yeah, let's see. Oh, BBAI and SoundHound. So, I'll start with Big Bear AI here. I don't like this one, or they really disappointed investors in the most recent quarter. So this stock kind of deserves to fall. If you look at the top right, look at the market cap. Their whole company is worth 850 million. So remember that. The whole company is worth 850 million, and just in the most recent quarter, they lost 110 million. The quarter before 12, and then two before that, another 100 million. So they're losing a lot of money. And if we look at the revenue, they were expecting the revenue to be 54 million, but it was only 43. So they missed on their revenue and they missed on their net income by a good chunk. So in my opinion, I'd stay away from BBAI, but that's also why the stock has been so heavily suppressed since there's so much bad news around them. Oh, here we go. SoundHound AI. Yeah, so this one I actually like a little more than that one. NVIDIA sold out of SoundHound AI, which was really surprising, but I like this one for their subscription revenue. Look at this. Their subscription business was up, to 30 million, when literally a year ago it was 400,000. So at this insane growth rate, for it to literally jump up that quick in 1 year, what's it going to be next quarter? I'm very curious. So, but they do lose money. They do lose money. Arthur said First Solar. Yeah, First Solar is Enphase's competitor. So they're more exposed to China. But I own Enphase Energy as my solar play. But First Solar is another one at a great valuation. They're trading at literally 10 times net income. So that's a very fair valuation, in my opinion. Again, they just sell commodity. They sell solar panels, but I think the tariffs are going to hurt them. But look at the net income they make. It's redonkulous. It's, 200, 300 million a quarter of net income. So yeah, First Solar, they crank out the money. Is BITO or MSTY any good? So these are covered call ETFs. They sell calls on Bitcoin and sell calls on the NASDAQ. So you won't outperform Bitcoin and you won't outperform the NASDAQ in the long run with these covered call ETFs, but you buy this to maximize your dividend income. So if you just want a really high dividend while you don't care about stock price appreciation, you could buy those. Oscar Health, Oscar Health right here has some of the most insane growth I've ever seen. Look at this sales right here. This is on an annual basis. In 2019, the sales were 500 million. Now in the most recent quarter, it's 9 billion. That is insane growth of their sales. So that's why I like them. But if we look at the net income right here, they're still losing money. Like in the most recent quarter, they lost 150 million. So I just like to see them stay net income positive. Yeah, what up, stocks and sports guy? Yeah, dude, Micron beat on earnings and check them out. They're up, 3.5% after hours. Still great. They triple beat on their metrics. And in their data center sales had tripled from the previous year. There was a lot of good news. I'm surprised they're not up more. ORCL, yeah, this is a huge cloud play, Oracle Cloud. And I think like SoftBank or whatever invested into them. But look at this right here. Their cloud and license revenue, it's up 8% year over year. So that, it was $12 billion. To keep growing at 8% is really impressive. But look at the profits out of this, the net income they're making. They're making $3 billion of net income a quarter. So Oracle, that's a cloud play. So is Google. Google's a now really good cloud play. Fubo TV, yeah, dude, Fubo is actually getting acquired by Disney, or like 80% of the stock is now owned by Disney, I think. But they're merging with Hulu, so that'll be cool. So I kind of own the opposite side of the bet here. I own Disney shares. I got 18 shares of Disney. Check out Dutch Bros. The only reason they're not profitable, I think Dutch Bros is profitable. Let me double check you on that one. They're adding shops everywhere, 100 in 2025. So yeah, actually, look at the company-operated shops right here. If we go to it quarterly, it's up 38% year over year. That's, for a restaurant in this environment, that's really impressive for Dutch Bros, in my opinion. But yeah, look at the net income right here. They're just now profitable. Like they made $6 million this quarter. That's real. Yeah, there's their operating profit. So yeah, Dutch Bros, they're like the Starbucks competitor. I've been there one time when I was in Arizona. I got some. Any energy stocks? So my favorite energy stock is ticker symbol CEG, Constellation Energy. They own the most amount of nuclear energy reactors in the world. They own the most geothermal energy plants in the world. So that's just my play on the energy. Roku. Oh, this is the last stock I look at. I gotta go. I'm so sorry, guys, but I really appreciate y'all being here. If you want to hit the follow button, we go live every day, twice a day. We'll be live in a couple hours. And if you want to help me out, I don't sell anything. I don't got a course book, Discord, WhatsApp, Telegram. I don't got none of that. Just go subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, my YouTube channel. I'm streaming on there as well. So if you want to go back in the stream and rewatch it, or you missed something, you can go there. But anyway, look at this right here. Look at their platform revenue on Roku. This is what's really impressive. It's up 17% year over year. So their platform revenue, this is what they do. They sell you a TV for break even, then they make money on the software. It's like reoccurring revenue for them. And look at the net income. They're so close to net income or making net income. So that's what's cool about Roku. I think that's a big Kathy Wood play. If we go to Kathy Wood's portfolio right here, Roku was her largest holding. Oh, hey, Kay, the app I'm currently using is called Mumu. If you want to download it, it's in the link tree in my bio. It's the very first link there if you want to get it. But yeah, I love this app for all the analysis you can do. There's also Robinhood. Robinhood is the second link, or you can just type it in the App Store. It's called Robinhood. But yeah, appreciate y'all being here. Hope you have a great rest of your day. We'll be live in a couple hours, and I really appreciate if you want to support me. Head over to my YouTube channel. I'm live on there whenever I'm streaming on here as well. And TikTok, this account I'm on has been permanently banned 3 times. I kid you not, it's been permanently banned and unbanned 3 times. So I'm worried this account's going to go away. So if you want to support me,